If you've ever wondered how traders manage to gain access to six or even seven figures of trading capital without putting their own savings at risk, then pay close attention. Over the next few minutes, I'm going to break down how funded trading programs operate, how their challenges are structured, and how you can avoid common traps along the way. And why should you listen? Because I've walked this path myself. I've gone from blowing up personal accounts to becoming a fully funded trader, managing over $1 million in capital, and I've since helped thousands of others navigate the exact same journey. What I'm about to share is everything I wish I had known before I ever signed up for my first evaluation. Before we dive into the modern virtual model, it's worth looking at how prop trading originally worked. Years ago, most major banks and hedge funds had dedicated proprietary trading divisions. They would actually advertise in newspapers, inviting aspiring traders to apply. Applicants would show up, complete intensive training, and eventually face a real evaluation test. Those who proved they could trade responsibly within strict risk limits would then be allocated capital by the bank or hedge fund. The deal was simple. The institution provided money, the trader provided skill, and profits were shared. This was a win-win. The trader got access to resources they could never fund themselves, and the bank diversified its capital across different strategies and styles of trading. Fast forward to today, and the system has evolved into what we call virtual funded trading firms. Instead of banks running these divisions, independent companies provide structured evaluations that mimic the process. Pass the test, and you gain access to a live account funded by the firm. Here's how it usually works. Most firms use an evaluation model. Some require just one stage, while others have a two-step process. You select the account size you'd like to qualify for. These can range anywhere from $10,000 up to $200,000 or more. The entry fee depends on the size. Smaller accounts cost under $100 to attempt. Larger accounts can be $1,000 or more. You're then provided with a demo account. Your task is to hit a set profit target without violating daily or overall drawdown limits. For example, one common structure is make 10% profit without losing more than 5% in a single day or 10% overall. If you complete phase 1, you often repeat a similar process in phase 2, though usually with a smaller target around 5%. Pass that too, and you're granted access to a funded account. On the live funded account, rules stay strict. Usually no more than 5% daily loss, no more than 10% total drawdown. The firm wants proof that you can manage risk consistently. If you trade profitably, you keep the majority, often 70–90%. And here's a bonus. After your first payout, many firms will refund your initial evaluation fee. The advantage is clear. Imagine trading a personal account of $10,000. A 10% gain means just $1,000. But trade a $100,000 account with the same strategy, and that 10% becomes $10,000 with no extra effort. Trading is one of the most scalable skills in the world. The same process can yield dramatically different results depending on account size. The beauty of funded trading is that it gives disciplined traders access to this scalability without needing to risk years of savings up front. Of course, not all programs are equal. Here are 3 crucial factors I use when deciding where to place my trust. This is the single most important metric. You need to know the firm actually pays traders who pass. Look into how long the company has been around, what traders are saying online, and whether their reviews are consistent over time. Nothing is worse than paying a fee, doing the work, passing the challenge, only to be denied your payout. Look closely at the balance between required profits and allowed drawdowns. For example, a 10% profit target with an 8% drawdown limit is much tougher than an 8% target with a 10% drawdown. The more forgiving the ratio, the more realistic it will be for you to sustain discipline and actually pass. Programs vary widely in price. Discounts are common, but if something looks too cheap compared to the industry average, that can be a red flag. Solid programs are rarely bargain basement. Remember, you're not paying for a chance. You're paying for access to a structured opportunity. Unfortunately, the rise of funded programs has also attracted shady operators. Here's what I watch for. Firms that allow high-frequency trading, HFT, with little oversight. This is often a sign they're not serious about payouts. Companies with no visible leadership or accountability. Anyone can start a prop firm with no real backing. New firms that appear overnight with massive discounts, but no track record longevity matters. If they've been around 4 or 5 years, chances are they're stable. Stick to firms that are transparent, established, and have real people accountable behind the brand. Here's a sobering reality. Only about 6-7% of traders who attempt a challenge actually pass and get funded. And of those, an even smaller percentage, less than 2%, manage to hold the account long enough to make consistent payouts. Now, does that mean it's impossible? Not at all. What it means is that most traders fail not because of the rules, but because of their own behavior. They treat evaluations like a lottery ticket instead of a business exam. The ones who succeed understand this. Funded trading is about process, not gambling. It's about boring consistency, limiting yourself to 1 or 2 high-quality trades a day, risking 1% or less per trade, keeping a journal, respecting your daily stop. Funded trading isn't a magic shortcut, but it is the most cost-effective way to learn and grow. Instead of losing thousands while figuring things out, you invest a smaller fee, prove your discipline, and gain access to serious capital. Mistakes stop being destructive and instead become affordable lessons. If you're serious about taking this path, don't waste time guessing which program to try. For the best funded trading offer available right now, click the link in the description. Secure your edge, learn under real rules, and start trading smarter today. Disclaimer: trading involves risk. Results vary and are not guaranteed. Rules, fees, and availability differ by program. Always review current terms and conditions before starting. This content is educational and not financial advice.